So many of you have reached out to me and said, Akshat, I want to invest 1 lakh rupees. Markets have fallen. Great time for me to invest. But I don't know anything about portfolio designing. Can you make a very quick video on this topic? So this video is especially for you. I will keep it short, brief, to the point, very precise as to what stocks you could consider buying right away with a 1 lakh portfolio. That, according to me, would be a very good winning portfolio. Very quick disclaimers. Number one, these are my personal recommendations. This does not mean that this is the only way of investing in the stock market and these are the only good stocks available. Actually, there are a bunch of stocks that are available at really good prices right now in the stock market. But this brings me to point two. I am giving this advice to a general investor who is a moderate risk investor. I'm not talking about super high risk people who want to go and invest in small caps, mid caps type of stocks. I'm talking about blue chip stocks, mostly blue chip stocks that you could consider investing. This is especially good time for beginners because these stocks that I'm going to talk about today, they are likely to give decent returns right away and these are fairly safe stocks. This is second key point. Third, I will talk a little bit about portfolio designing. So portfolio designing simply means that how much percentage of finance stocks should you buy, non-finance stocks should you buy, why, how many stocks in total with a portfolio of 1 lakh rupee I should consider investing in. So these are some of the key things that I will touch upon in a very quick, easy to understand format. Now, many of you watch my videos just for stock recommendations. So why should I waste your time? So these are the list of stocks that I am going to show live investments in so that you gain confidence. Now, most of the investors who just come to get stock recommendations, they would have bounced off. So now the next part of the talk is especially for serious investors so that you understand why it makes sense for you to buy these type of stocks. Hold it, average it more. There is one more special announcement I'll make for all of you serious investors. So stay tuned. Alright, so why these stocks? So let me first and foremost talk about portfolio design. So essentially your portfolio should be made up of different sectors. For example, if you are investing 1 lakh rupees, then it should not be that you pick this entire 1 lakh rupee and throw it in banks. That does not make much sense. If something bad happens with banks, then having a highly concentrated portfolio. Concentrated means that all your portfolio is being thrown at banks only, right? So bad stuff will happen to your portfolio. So please don't do that. Be well diversified. So what do I mean by diversification? So let's understand it from a Nifty perspective. So when we talk about Nifty 50 companies, Nifty 50 weight is made up of approximately 40-45% finance sector, in which most of these are banking stocks. So essentially our portfolio should also be 40-45-50% finance. And rest 50% could be non-finance. So what other sectors could this be? So this could be, for example, FMCG sector, right? Which is companies like Nestle, Dabur, you have Hindustan Unilever, you have Asian Paints type of companies. Second category or second sector that you could consider outside finance would be consumer durables. So these are very stable, staple, cash flow rich businesses. You have companies like Whirlpool, Symphony, and bunch of different stocks. Similarly, you can also go and experiment and invest a little bit of money in commodities. This could be gold oriented companies or steel oriented companies. So you can consider taking positions. But very quickly recapping it, then I will move on to explaining about individual stocks and why I have picked those. So very quickly summarizing the portfolio design part of it, 40-50% finance and rest 50% should come from other sectors. This is my personal advice to you. Now on to which specific stocks would we consider and how many stocks should we consider. So I would say that you should not purchase more than 10 to 12 stocks in total and you should evenly split this money in these 10-12 stocks. So let us first and foremost talk about why have I purchased certain types of banks and what are the banks that I would recommend. So first and foremost, I would recommend you something like Canara Bank because that is a value buy. Why? Because Canara Bank is a PSU bank, and if I take you through the fundamentals of it, you will see a few good things happening here. So for example, if you go on Tickertape and if you take a look at PB ratio, you will see that Canara Bank is trading at half of its book value. What does that mean? It means that the stock is available at a very attractive price. It is not even hitting its book value. Now, you would say, Akshat, you know what? PSU banks are really bad. Usually, you are recommending PSU banks. I'm not recommending it from a growth point of view. I'm just playing a value buying game in it. And if you're buying 5 or 6 banks, then one can be a value buy stock. And why am I recommending something like Canara Bank? Because if you take a look at financials, you will see something amazing. That from 2018 to 2021, every single year, the total revenues have gone up. The last year's revenue in 2021 were the best. Same goes out for net profits. Even the profits have been astronomically high. So these type of PSU banks are likely to reach their book value at least. So from that perspective, I would say that Canara Bank or PNB are good buys at this moment. So you could consider investing in one such stock. Now let's move on to stable banks. So these would be HDFC and ICICI. Now you'd say, Akshat, you know what? These banks are already very big. Majority of their growth has already happened. Now why are you recommending buying these type of stocks? So take a look at this chart and see to what extent HDFC Bank or Axis Bank or ICICI has fallen. So I will show you two charts here. One of Axis Bank. So from its top, it has fallen by 24%. And HDFC Bank, again, from its top, it has fallen by 18%. What does this mean? This means that if you buy this stock and if you hold it for a 6, 8, 10 months, and if the market is doing reasonably well, I can almost guarantee you that these stocks will again hit their all-time high. And how much return will you make? You will make at least 25-30% return on it within a single year. Investing in a safe stock that will not give you a heart attack in the stock market because of volatility, right? So from that perspective, these are stable cash flow banks which are generating good returns. Similarly, if you analyze the financial statements for HDFC Bank, you will see that they have very low default probability, quality is very good, growth scores are very high, everything is in green, and revenues are almost at an all-time high. What about profits? Even profits are making higher highs. So from that perspective, there is absolutely nothing fundamentally off about HDFC Bank or Axis Bank. They are doing really well. It is just that the market is down. Therefore, these stocks are available at a discount. The moment market starts going up, there is positive sentiment around the world. These banks will grow again to their top. And how much will you gain? You will easily gain 20-25% from that perspective. So with that spirit in mind, let us also talk about other non-finance stocks. For example, one good stock, one really great stock that I would ask you to look into is GMM Pfaudler. It's a cash-rich company. Its revenues has been growing every single year, and it is available at how much discount? Drum roll, 21%. Okay, so it has been down by 21%, as you can see from this chart. Really deep discounts. These type of stocks do not fall that much. So it's a sale that is happening in the stock market right now, and you could consider investing at least one of your positions in something like GMM Pfaudler. Then moving on, if we speak about consumer durables, because we should also have a little bit of consumer durables in our portfolio. So you could consider Symphony, you could consider Whirlpool. I feel Whirlpool is available at a deep discount right now. The stock has fallen by how much? 31%, right? So it has fallen from its peak by 31%. Again, just let me very quickly show you the financial statements. So total revenues have been on the rise. There has not been much decline. Same goes for profits, fairly stable, growing. So no reason why there should have been a 35-ish% fall on Whirlpool. So I feel that this stock is available at deep discounts. Finally, I will talk about something like HUL. Please watch my video tonight. I am talking about technical indicators and how to buy. So I have talked about something called a zone of bulk buying. It's a must-watch video. Do watch it. It's technical analysis part 2. So the stock is available at zone of bulk buying. Because the stock has bottomed out. It is almost staying at the same level now despite the market falling. So in my opinion, it has bottomed out. It should not fall any further, and probably this might be the last chance to buy a quality stock like HUL in bulk. So from that perspective, I'm quite bullish on HUL. You can also take some positions in something like Asian Paints or Dabur. These are all available at attractive prices. So what is the summary? The summary is fairly simple, that a portfolio design should be sensibly made. That's one. Second, as a new investor, as a novice, you should not be taking too much risk. So please don't go to mid caps and small caps as of now. Just start with large caps because the entire market is available at such attractive valuations. Everything is available at discount. So start with good stocks first and deploy your 1 lakh capital to gain some confidence. But yes, please learn how to stomach the volatility, because unless you have the courage to buy when the markets are falling, you will not make money. So let me know your thoughts on portfolio design. Give it a thumbs up and I will see you the next time.